Laurie, let's get to the big question of the moment for you. An upgrade to your price target on the S&P 500, 4,500 this year from 43.25. Next year, 4,900. But there's a massive caveat here, Laurie. You are looking for some real weakness, some real volatility in the months ahead.
Yeah, John, and to be honest, we've seen a number of strategists come out over the past week articulating pullback concerns. This is something I've been worried about for a few months, and we've said we didn't know quite when it was going to play out. But typically when you experience a peak rate of change in S&P 500 EPS growth, which it looks like 2Q will have to end up being with growth of about 90% or so. But when you typically see that, you typically get stocks that are down 6 months later, modestly. 2 of the last 3 times it's happened, it's been about a 9% drawdown peak to trough. You pile on top of that valuation concerns, margin discussions are starting to heat up again with supply chain and labor pressure is a big point of worry, and positioning and sentiment have been stretched. Now, a lot of these things have been true for quite some time, so we've actually been worried about them for quite a while. I'll tell you, John, this morning I was actually intrigued that a lot of the focus was on our pullback commentary, which frankly is not really all that new for us.
Yeah.
We're actually trying to move the conversation a few steps ahead. How do we want to use this as longer-term investors? That's why we put out the 2022 target this morning. We see gains of about 9%. We think that this is a dip that you want to buy. And I've actually been pushing back on some of the growth scare commentary that's been coming out over the past week because we think economic recession risks are very low. We think there are some earnings hurdles that are coming up. They are worth taking seriously. They could do some damage to the market. But ultimately, we think this is a dip you are going to want to buy because we still have a very, very strong underlying economy.
We have a ton of time to get through this, Laurie, but the first question that jumps into my mind, do you want to buy the cyclicals then? Because that dip's been available to you since the end of March, and the small caps, that's when that started, and the banks a little bit later.
I think it depends on the reasons for the dip, but the pressures that are on the market right now, I think, are actually a little bit more pertinent to the value trade as opposed to the growth or secular trade. And small caps, I would put in that sort of value cyclical bucket as well. I think the margin pressures are more acute there. Also, COVID concerns we have seen, we do think that those are starting to perk up a little bit, that they're starting to improve. But as long as those hang around, that is something that all year has been more of a pressure point on the value and the small cap trade.